And I just want to introduce to you the first panel that we're going to be talking to, because Ruth Lee is an economic advisor at Arbuthnot Banking Group. Jeremy Stretch joins us, a senior currency strategist from Rabobank International. And we also have our guest host for the hour, Alpesh Patel, principal at Profinian Group. Welcome to all of you. Thank you for coming in. Ruth, let's start with you, as you have your hands on all the economic data quite closely. Exactly. But what we saw today, the heaviest level on record for borrowing in Britain. We saw National Statistics Office saying a lower than forecasted figure, granted, but still 18.7 billion was that figure. We're also seeing lending to UK firms falling at a record pace. Simultaneously, mortgage approvals falling to 9-month lows during the month of February. Can you just kind of summarise the direction that you see the UK?
Well, I think the first thing to say is that we're getting all very excited about the fact that these borrowing figures are marginally less worse than we expected, but they are still absolutely appalling. But it will enable the Chancellor of the Exchequer probably next week in his budget to say, my borrowing is looking a bit better than I said back in November, December. But I think the truth is that we still have an economy that is still recovering probably. There is still increased activity. One of the reasons why the receipts were better in February, the public sector receipts were better in February, because I suspect that retail sales were a bit up and economic activity generally was picking up. And as for the housing market, actually, it's not that bleak. I mean, they talk about approvals falling, but actually, looking at the wires on what the Council for Mortgage Lenders is saying, is they're actually reasonably satisfied that the way things are working out is okay, it's satisfactory. It's just that really January and February this year we had the big freeze, and this just froze everything in this country because we're not really used to cold weather. So recovery's still there, not very clever, awful public sector finances. How's that?
Jeremy, would you agree with Ruth's analysis of things?
I think so. I think as far as the fiscal position is concerned, we're still speeding towards an inevitable crash. We're driving in our speeding car and we're driving at 65 miles per hour towards the wall rather than 70. That's probably the sort of scenario that we're really looking at here. And yes, I think we shouldn't get too carried away with the uncertainties about the first quarter of this year. I think there are a number of headwinds, or quite literally headwinds, that we've faced in the first quarter of this year in terms of the bad weather. So I think there's a case to say that if you look at the survey data and you compare that with the ONS data, there's a bit of a paradox here, and it's a question of which do you believe is going to be correct. Are we going to see the survey data in terms of the purchasing manager surveys suggesting that we're going to see a modest recovery through the course of this year? I think that's probably the case, but of course from the fiscal side I think there are still ongoing worries.
I want to come back to the sterling topic in just a moment. Alpesh.
Well, you know, from my perspective, I'm thinking, well, okay, what's the silver lining to any of this? And what I'd be interested to hear from the guests is where they see exports fitting into this. Do we see the escape route being a plunging currency and some form of export-led recovery? Or is this just, yes, there is some short-term peace and calm, but we really are still in the eye of the storm, and we're going to get plummeting stock prices? For instance, how do we relate what we're talking about in the real economy back to equities, and in particular, as I say, in terms of exports, how important are these going to be going forward to be the saviour for us, if at all?
We can't export our way out of this.
Well, I was going to say, I think that's absolutely bang on, because if you look at all the components of demand, bar net exports, you know there are going to be major restraints on them. If you look at personal consumption, household consumption, which is the biggest item in GDP, that's going to be held back by still high unemployment, people still trying to rebalance their housing, their balance sheets, and the like, and indeed taxes are going to go up as well. If you look at public spending, then because we've been these awful public sector figures, that's got to come under some sort of pressure. If you look at business investment, which is the sort of the third component of GDP, we know that is absolutely flat on its back. The truth is that the business investment does not lead recoveries. If anything, you know, it lags them, because businesses have to be sure there's the demand there before they invest. So that leaves you with net exports. Either higher exports or indeed import substitution. And of course that's the sort of the holy grail of a recovery for this country. And that is why I think the weaker pound against both the euro and the dollar is actually useful, but it's not happening yet. That's the problem.
So more pound weakness is what you're indicating, Jeremy?
Well, recovery in our export markets too.
Well, yeah. Jeremy, I mean, the headline that many are going with is, you know, sell sterling, and that's going to continue, and sterling's going to fall off a cliff. Do you still think that that could happen?
I don't think necessarily will. I mean, we've seen a barrage of negative headlines over the course of recent weeks. We've seen speculative investors build record short positions in sterling. So we've seen the conditions there for additional sterling weakness. We've obviously seen the narrowing in the opinion poll leads over recent weeks as well, so putting in that extra layer of political uncertainty. And yes, sterling has been under some degree of pressure, but I don't necessarily think that's going to result in a sterling crisis or a collapse in sterling or the 130 level in sterling against the dollar that some people are estimating. Yes, I think we're going to have further uncertainty until we get through the election period, assuming that we get a credible government on the other side, which of course is a big if, but assuming that we do, then I think that will reduce some of the political disadvantages on sterling.